So, national headlines are basically screaming right now that the housing market is just completely dead. I
Yeah.
mean, if you scroll through any financial news feed today, the whole overarching narrative is that high interest rates have, completely paralyzed the system.
Oh, absolutely. The story we're constantly being spoon-fed is that uh, nobody's selling because they're trapped by their 3% pandemic mortgages, right?
Right, the golden handcuffs.
Exactly.
Yeah.
And that nobody is buying because affordability has just hit a total brick wall. Supposedly, the whole machine is just frozen in ice.
Yeah, and it's a very loud, very persuasive narrative. And I guess if you're only looking at those massive macroeconomic aggregates, you could almost convince yourself it's true.
Well, the national media really loves a dramatic standstill.
Yeah.
It gets clicks.
It really does. But I was digging into some local data this week that completely shatters that whole narrative. Because
Ah,
it turns out if you stop looking at the national averages and start looking at the actual, street level data, the market isn't frozen at all.
not even close.
So today, we are unpacking what local insiders are calling the quiet reset. Our mission for this deep dive is to show you the truth that's hiding in the microdata. We really want to look at how buyers and sellers are quietly returning to the table and honestly just completely ignoring the national doom and gloom.
Which, by the way, is exactly how savvy professionals operate. I mean, you don't find actionable opportunity in a national headline.
Right.
By the time a trend hits the evening news, the window to capitalize on it has already closed. The real opportunities are always found in those hyperlocal, subtle shifts.
And to find those subtle shifts today, we are looking at a really fantastic source document tracking the Tarrant County housing market. What I love about this is that we aren't pulling from some disconnected Wall Street think tank, right?
Yeah, this is real data.
Exactly, it comes straight from the trenches.
Right.
We're looking at numbers compiled by John and Nikki Baptiste over at local realty agency Mid-Cities in Bedford. They are the local experts dealing with buyers and sellers every single day, and they've isolated a very specific slice of the market for us to look at.
And that isolation is so key because when you aggregate the whole country or even a whole state like Texas, the data gets incredibly muddy.
Oh, for sure.
So what John and Nikki Baptiste have done is zoomed in specifically on the mid-cities area of Tarrant County, focusing strictly on the $600,000 to $799,999 price range, and specifically looking at the month of February over the last few years.
Which is brilliant because putting up those guardrails strips away the noise, right? You
Yeah.
ignore the ultra luxury market or that crazy entry level feeding frenzy. We get to see exactly what the traditional move up buyer is doing. Okay, let's unpack this data. Because to understand this quiet reset, we really have to start by dismantling that initial myth, the idea that nobody's is buying.
Right, the frozen market myth.
Exactly. So I looked at the closed sales for this specific 600,000 to roughly 800,000 bracket in February, fully expecting to see a massive drop-off given the current interest rates. But the data shows this really quiet, steady climb.
It's pretty surprising, honestly.
It is. 2 years ago, in February, there were 66 closed sales. Last year, it ticked up to 74. And this February, right in the teeth of all these pessimistic headlines, it climbed again to 84 closed sales. Buyers definitely haven't disappeared.
No, they're just behaving differently.
Yeah.
66 to 74 to 84, that's a definitive upward trend.
Yeah, it's like someone looking at an empty waiting area at a restaurant and just assuming the place is closed, right?
Yes.
But if you actually look at the data, the dining room is quietly filling up with guests.
That's a great way to put it. And what's fascinating here is the second data point driving this, which is rising inventory, the supply side of the equation.
Okay, lay the numbers on us.
So 2 years ago, coming off that crazy pandemic crunch, there were only 252 homes available in this price bracket in Tarrant County. Last year, it rose to 332, and this February, it actually hit 381 available homes.
Wow, so that is a massive shift from the incredibly tight inventory of those pandemic years.
It really is.
Yeah.
And that massive shift fundamentally alters buyer psychology.
Yeah.
Because suddenly, buyers have the ultimate luxury. They have choices. They have options.
Right. Because the immediate causal effect of having more choices is a change in how long homes sit on the market, right? The gift of time.
Exactly. Time is returning to the transaction.
So looking at the median days on market, the data shows this crazy fluctuation. A couple of years ago, it was 52 days. Then last year, it dropped to a frantic 33 days. And now It's climbing back up to about 65 days.
Yeah, so it basically doubled year over year.
Which is wild. And here's where it gets really interesting, because I have to push back on this a little bit. To a casual observer or, a seller who bought into the hype of the 2021 market, a house sitting for 65 days sounds like a negative thing.
Oh, they panic. They think the market is completely failing.
Exactly. It's like back during the pandemic, the market was basically speed dating. It was frantic. People were waiving inspections, throwing multiple offers in the dark. So does 65 days just mean we're returning to a normal courtship?
I love that speed dating analogy because that's exactly what it was. But to answer your question, yes. Longer days on market is actually a deeply positive sign of a balanced market.
How so? Because sellers are definitely stressing out after week 3.
I know, but longer to sell doesn't mean failing to sell.
Ah.
Buyers are just acting carefully now. They're comparing pricing, they are deeply inspecting the condition and the location, and crucially, they're actually negotiating again.
Because they can. They have 381 options now.
Right. In 2021, the market wasn't functioning. It was just a speculative frenzy.
Yeah.
House selling in 7 days isn't a healthy market. It's a panic attack. 65 days gives you a normal 30 days to negotiate and a normal 30-day escrow for inspections and underwriting.
Okay, that makes total sense, but that leads us directly into this logical paradox, because if I am looking at this strictly through the lens of, basic economics, the math isn't mathing.
How so?
Well, if inventory is up nearly 50% and homes are sitting on the market twice as long as last year, conventional wisdom says prices should be plummeting, right? Buyers have all the leverage, so are prices crashing?
No, they aren't. And that's the third piece of the puzzle. Prices are astonishingly stable.
It's crazy. The median sales price moved from around $685,000 down just a bit to $658,900, and now it sits comfortably at $665,000. It barely moved.
Right, they are incredibly sticky.
So why aren't sellers panicking and slashing prices?
If we connect this to the bigger picture, this exact combination of signals, rising sales, rising inventory, longer time on market, and stable prices, this defines the quiet reset. It proves we aren't seeing a dramatic crash, and we aren't seeing a massive surge. Just a market holding steady and acting rationally.
But why aren't they dropping the price? If a house sits for 2 months, usually the seller caves.
Because of the financial health of the seller. Think back to the 2008 housing crisis. Why did prices plummet then?
Because everyone had adjustable rate mortgages they couldn't afford. It was all distress supply.
Exactly. They were forced to fire sale to avoid foreclosure. But today, in the mid-cities area, sellers are sitting on mountains of unprecedented equity. They have fixed low-interest mortgages. They aren't bleeding cash. So if a buyer lowballs them, the seller just says, no thanks, I'll wait.
Ah, so it's patient supply meeting careful demand.
Precisely. And there's another layer to this, too. Instead of dropping the top-line price, which hurts their ego and the neighborhood comps, sellers are negotiating on terms.
Like offering cash at closing.
Yes.
Yeah.
They'll offer a concession, like $15,000 to permanently buy down the buyer's mortgage rate. So the buyer gets the affordable monthly payment, the seller keeps the price at $665,000, and the headline data looks perfectly stable.
Wow, so the market is basically solving its own affordability crisis behind closed doors.
Exactly, deal by deal.
So what does this all mean for the listener? I mean, if the local reality in Tarrant County is this balanced, healthy reset, why is there such a massive disconnect? Why aren't you hearing this on the evening news?
Well, the lag exists because real estate is hyperlocal. But the national news relies on massive, backward-looking aggregates. They average out the coastal booms with the Midwestern lulls and report on it 3 months late.
Looking in the rearview mirror.
Right. But local markets like the mid-cities area behave on their own microeconomic rules. A buyer in Bedford doesn't care what the national average is doing. They care about local corporate relocations and specific school districts. The real opportunities always appear in these subtle local shifts way before the broader narrative catches up.
Which is exactly why the advice from John and Nikki Baptiste at local realty agency Mid-Cities is so crucial right now, because they are actually tracking the foot traffic at open houses this weekend.
Yes, and their advice is very clear. Sellers need to be highly strategic. You can't just stick a sign in the yard anymore.
Right, you actually have to paint the trim and clean the house.
Exactly. Meticulous presentation and sharp pricing. Because buyers have 65 days to notice the flaws. And for buyers, you need to take advantage of this newfound leverage and time. Don't approach it like a 2008 fire sale, but definitely negotiate a fair, sustainable deal.
Okay, I think that's a perfect place to summarize this for everyone listening. The core takeaway here is that the market isn't frozen. It's just no longer a frenzy, right? It's a quiet reset where the power is finally balancing out between buyers and sellers in Tarrant County.
It really is. And, this raises an important question to leave you with, stepping back from the real estate data for a second.
Oh, I love this. Go ahead.
If the real actionable opportunities in real estate are found by completely ignoring national panic and focusing on local, subtle data shifts, what other major areas of your life or your career or your local economy are you judging based on loud national headlines?
Oh, wow.
Right. When you should really be looking at the quiet, local data right in front of you.
That is such a profound thought to end on. We let national narratives dictate so much of our decision-making. So take that with you this week. Look closely at the localized data in your own life and keep questioning the headlines. Thanks for joining us on this deep dive.